There are a few data points that are a little worrisome. Germany's manufacturing sector has slowed down a little bit. We have seen a second wave of a virus actually break out in Sweden and Iran. The second wave is real. It is taking place. Fortunately, we have not seen a rise in mortality along with that. I don't know if that's because high-risk populations are taking greater precaution than in the first wave, but we're not seeing the same type of hit to humanity, and that may be a really good sign in that it may mean that people remain engaged in the economy. We don't need to see a second shutdown in response to that second wave.
I mean, gosh, we had a guest on, Jeff, from was an equity analyst earlier this show. He said that, Carnival Cruise Lines, they're starting to push back their planned resailings. If we start to see companies say, well, we're going to open here, if we start to see the signs of, I don't want to say reclosing or re-shutdown, but delays, because data pops up. What does that mean for the equity market?
It's certainly a setback. So the recovery is real and it is taking place based on all kind of measures of data that we're looking at. But investors have recognized this. So the market is vulnerable if the pace slows or we see setbacks, as you note out. Yet the pullback may not mean we're tracing all the way back to the March lows. Since it's only been in recent weeks that we've seen cyclicals lead the market and bond yields start to move. So it's only been more recently that investors have embraced a more optimistic outlook for a more rapid economic recovery. So a pullback on some of this setback, if indeed this is the case and we get a number of setbacks in the data, we may only give back maybe the last few weeks of the move in the market rather than a return to the lows. But I'd add that I think the bigger risk for investors might be that they're expecting a further rebound in the wrong stocks. They're looking to see leadership from the old leaders of the last cycle rather than new leadership that always comes with a new cycle.
It's like the pandemic, as far as investing goes anyway, Jeff. It's like people just went back to what they were doing let's buy Apple, let's buy Microsoft. They're valued at now $1.5 trillion. That's fine. You can buy high and sell higher. Any unloved sectors, globally, emerging markets, small caps, that you and your team think maybe haven't reflected some of the optimism down the road?
Yeah, I'm increasingly excited about the financial sector. This is an area that's been left for dead for the last 12 years. And we're actually, maybe with a little yield curve steepness, maybe we're not seeing as much in terms of loan losses as maybe these companies have reserved for. Maybe they're able to turn those dividends back on again. This is an area that in recent weeks has led the market, along with cyclicals, along with value stocks, that I think will actually be the leaders of this next cycle, as we often see this rotation between growth and value every other cycle, and I think we're poised for that. So that's an area that could really look quite good going forward. Again, an area that's been unloved.